Well, guys, are we witnessing it once again? Cracks appearing in the bonds market that we haven't quite seen boil over into risk. Well, as it turns out, some of the biggest moves in over 30 years have just appeared in some currencies around the world. And this has certain central banks starting to panic once again. But could it be the volume in the dark pool liquidity that tells us more about anything that Wall Street is doing right now? In today's video, we'll talk about why this is a point that we all need to be paying attention to and how big money seems to be flowing back into the largest hedges in the world. Stocks, commodities, and cryptos. Let's take a look at exactly what was happening with the biggest flows over the last 24 hours. Guys, this one's not to be missed. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the big data, and of course, what is Wall Street up to? Are they really buying this dip right now? And more importantly, are they selling into us as retail traders? As Warren Buffett mentions, he's going to step down at the end of 2025. The stock has taken a bit of a tumble. But really, the story right now seems to be in the calm before the storm. One of the most important technical levels and of course flow levels that we've seen in quite some time, arguably actually in over a month and a bit. So what exactly is happening as business optimism craters and future expenditure seems to be dropping like a rock? Well, basically we are not seeing the signs of what usually is a great investing market. And it has a lot of people concerned about whether Wall Street is really buying this dip or whether they're artificially inflating it. And this makes a lot of sense when we look at the buyback window, obviously opening back up after being closed, and earnings coming out from some of the biggest stocks. While earnings have been really good, it looks like buybacks could be artificially inflating the market. And while we already spoke about this once before, it does seem like basically no future expenditure is being put into growing a business and doing anything else. And the money seems to be driving into the buybacks themselves. A record number, $192 billion in buybacks, the highest ever recorded, even higher than 2022, has just been announced. And this basically means executives are juicing the EPS on stocks. So effectively, this is a potentially artificially inflated market. What do you guys think down below? Can this trend be set to continue? Recently, we talked about how they were mentioning that they probably wouldn't be doing buybacks like this in such great numbers. But as they're now not spending on the future, they've got nothing better to do than to buy their own stocks. And it seems to be particularly in the AI sectors. And this is really interesting because it's creating a greedy Wall Street once again. In fact, we went from extreme fear just a month ago, 3 on the reading, to greed once again as of the latest recording right now. And this basically means that everybody is back in. But is it the wrong type of person that's back in? Is it us, the retail trader, and actually not Wall Street themselves? Well, let's have a look at the latest data here from Deutsche Bank and Goldman Sachs. First up, Goldman Sachs data, funding spreads versus the SP 500. You'll notice here that funding spreads are dropping off a cliff. Now, generally speaking, when you're looking at funding spreads, you usually want those to be increasing. And you'll notice that when they're kind of like flat and sideways, that's okay. When they're increasing pretty strongly, that can obviously drive a very nice bull market such as over here. And when they're on a steep decline, it can mean subdued kind of gains in the future or even further selling to come, such as what happened in 2022. So is this exactly what is actually happening right now? Well, let's take a look at one of the big data points we've mentioned recently on the channel, which was that we're buying. Yeah, okay, the latest sentiment reports, what's it tell us? We're all supposedly scared, absolutely, and not buying anything. But as you guys know, retail traders have all been saying they're not buying, but actually the flows are so high. In fact, according to JP Morgan's latest report here, $40 billion was pumped in April just alone, and that's topping the biggest month ever, which previously was, of course, March. So who really is buying the dip? Well, on surface of it, it looks like buybacks are buying the dip. And of course, so the companies themselves, and of course, retail traders, you and I. So could this cause a secondary dip in markets? More of that 1998 narrative, more of this kind of doubling bottom style market condition. Well, of course, we're at that turning point. We're at the period that we've talked about now for over a month, which is the 5,600 the 5660 zone, the danger zone as we've mentioned it. And we did just see something very weird happen on Monday, kind of like the calm before the storm, one of the lowest volumes that we've had in over a month. And in fact, if you take a look back here, according to TrendSpider, the low volume periods that we've had at these highs, maybe a coincidence, have often been turning points towards the downside. So the question then becomes, what is the flow telling us? And are we actually seeing a weak economy? Well, of course, if we take a look here at the SP500 forward EPS, it's been pretty good. The earnings season has held true so far, and we already expected that most of the biggest companies, that is the big Mag 7 businesses, would do very well across the board. Part of the reason is because the way tariffs work is they often front load demand. In fact, something we talked about on our Monday stream, and we got a lot of, I guess you guys are insiders since you're going to the stores, we got a lot of evidence pointing towards people going into things like Lowe's and just buying stuff. People are just absolutely doing home improvements and all sorts of things before tariffs hit. So what we're getting a front load. Remember, a lot of businesses hold 3 to 6 months of inventory. And then what tends to happen after that is we seem to see a demand fall off, which obviously then sometimes comes with deflation and can end up in a recession. And in fact, the latest poly market stats, which I don't have quite here, but I'll tell you them anyway, have that and this is a gambling website, so obviously you've got to be very, very careful about these, actually have a lot of divergence with the stock market. The stock market is kind of saying, less chance of recession. The poly market stats have higher chance of recession. Now, it's just interesting to note that because when you look at these stats, poly market actually has front loaded some of the stock market, and it could be seen as potentially a little bit of a lead indicator, at least on the latest reports. So a very interesting one there indeed. So let's now take a look at the earnings for this week. We just had Palantir earnings, and of course on the surface, as we'll look at them soon, they were another fantastic result. But the market had been ripping, so of course it was a buy the rumor, sell the fact. A lot of you guys were astute enough to probably recognize that factor on the Monday open before, of course, it did end up resulting. Now we'll find out whether AMD is a sell the rumor, buy the fact, and of course Datadog and others are coming out this week. Just remember, whenever you're looking at earnings, one of the big things that we do here on the channel is we make sure that you guys are aware, and we all have to be aware of this, of the options market volatility. Palantir was expected to move plus or minus 15% off earnings, and I think it moved about 9 to 10% down after hours. Datadog's meant to be plus minus 12. That's a big move. And AMD is plus minus 10. So when you're coming to these earnings, it's very important to know the implied movement of options, because otherwise you can be left with some big issues. So we already know that Wall Street is potentially selling into us as retail traders. We'll see that in a moment with dark pool liquidity. We also know that when the stock market creates structure as it has right now, that there is a decent chance that even if we do end up seeing sells, that bulls will buy back in. And one of the main reasons for this, of course, has been the Zweig breadth thrust, and also that we've recovered over 50% of the bear market so far. And the reason we call it a bear market is, of course, it dropped over 20% from top to bottom, and then it's recovered back over 50% of that. Now, in all cases since the 1950s here, we've actually seen, according to Ryan Detrick, we've generally seen the market never make a new low. There has been one case, though, where it did happen, and of course, that was 2022. So interesting stat, certainly one for the bulls out there. Now let's take a look at some of the biggest transactions. And as I mentioned, and as we've been talking about, guys, there are more transactions coming in here near these highs. We've got QLD, which is the ProShares Ultra Qs, big dark pool transaction coming in right near the highs right now. And then, of course, we've also got SOX Semiconductor, one of the most well-known, of course, semiconductor ETFs, getting a large dark pool transaction on it as well. Now, while this doesn't necessarily mean the market is going to turn to the downside, it could also be a buy. Of course, we don't know that yet. We can see that oftentimes these are near turning points. And of course, we have to consider these, and we discuss it all the time. We also saw a few Microsoft sells, most likely coming in at the exact level that previously had the number one largest transaction of the last 5 years. And of course, what did we see after earnings? A little bit of take profit. And as we'll show today, we seem to be getting a lot of correlation with a couple of big problems. Number one of those is, of course, the technicals, the supply, The level that we saw previously transacted at with some of the biggest transactions has now been transacted again. This is a share from our X account, courtesy of Volume Leaders, that obviously is in the description down below if you want to follow us there. But could it be that Wall Street are selling into this rally, looking to fill their bags maybe at a cheaper price? Well, so far we're following the 98 narrative perfectly. And of course, we never want to just rely on this type of concept, but it does make some sense. If you think about it, we are in a current potential bubble in markets with high valuations. Were we in a bubble in the 90s? Absolutely. Did the market go more ballistic afterwards? Yes. Do tariffs tend to take a long time to really cause a serious amount of pain? Traditionally, yes, it does take time to go through and actually cause the pain. So, of course, the next question is, are we going to continue to see them on the markets? Well, I think we're going to see some form of tariff, so we have to assume that it may do damage later on. But this is exactly how we're following it right now. We've come down, we've sat over the top, we've come down further, and you can see here, according to Jurian Timmer from Fidelity, basically we are at the level of supply. So it's kind of like the danger zone, and most importantly, a key level where we could see a catalyst. And one of those catalysts could be Wednesday this week, the Federal Reserve potential rate cut. Now, I'm interested to know whether you guys think there's going to be a rate cut. Pause the video here, put a comment down below. Do you think there's going to be a rate cut this week? I am guessing most of you don't, but some of you probably do. Now, the reason I say this is because what we might see is a little bit of a spat between Trump and Jerome Powell. He does have a press conference, obviously, where I'm sure he'll mention all the tools and blah, blah, blah after the rate cut decision. But if he doesn't rate cut, I could see this being a bit of a tumultuous, let's say, Truth Social kind of moment. And that could cause, of course, some issues in the markets. There are pillars in the US market. One of those is, of course, that the Federal Reserve generally does come in and they have the plunge protection team. Now, obviously, if that is questioned, we have seen that being a turning point for markets, along with the bond yields. Remember, the bond market is starting to blink a little bit here again, and that could all be a bit of a calm before the storm. Now, according here to App Economy Insights, we can see the latest Palantir earnings, and on the surface, they were amazing. Customers up 39% year on year. Net dollar retention up 124%. Revenue up 39% year on year. Forward guidance up 36%. Wow. I mean, what a number, yeah? But still, the market had already bought up something like from $70 to $120. So it was a buy the rumor, sell the fact. Now, most people that are bullish right now are going to be looking at breadth. Breadth. We've bought this up for weeks and weeks and weeks. We've talked about this a lot. And obviously, we do think that the market is in at least some form of very strong read traditionally. Since the 1950s, if you have a look at these wave breadth thrusts, they haven't been wrong over a 12-month read. It is important to note, though, that if we were in weird times, such as the 1930s period, which some of you obviously do believe we're in, there were failings around that period. So will this wave breadth thrust be enough to buy off? It's one of the reasons. Another thing to note as well is while we're seeing gold run again, could silver still come with it? Silver just breaking out, as you'll see later on in today's video. Pretty strong moves in gold and silver. Also a sign of the times. People are concerned that Taiwan dollar.
Visa is expected to benefit from economic growth despite recession fears. The company reported 13% growth in cross-border payment volume and maintains a strong management strategy, avoiding lending risks. Its stock remains a bargain with a forward PE ratio below historical averages. NVIDIA's dominance in AI GPUs is threatened by US-China trade tensions, rising competition, and declining gross margins. The potential for a market bubble looms as adoption rates may be overestimated. The U.S. Department of Justice has proposed that Alphabet Inc. divest its ADX advertising marketplace and ad server DFP, following a judge's ruling on illegal monopoly. This could significantly impact Google's operations and market position.